then I don't know. I struggle. I struggle like a little bit. But some trades, like don't get me wrong. Like last week, I was do good on my FDMO trial, just like going off the 4 hour or the 1 hour, but it's not really consistent on what I need to look at, or I just kind of like go have a feeling, but I don't think that's sustainable to go off, if that makes sense.
Yep. Give me 1 second. This should be the last phone call.
Yeah. No worries, bro. My ears are ringing. No worries, bro.
All right, so yeah, you said ICT background, you do 4 hour blah 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 directional bias, you scale down to the appropriate corresponding time frames, yada yada yada, all that stuff.
Yeah, essentially, yeah.
Okay. So, and it's like you're trying to just simplify all of that, right? That's why you're trading ICC.
Yeah, so
Okay.
like for example, like I'll use like the 4 hour. I do 4 hour ICC, and then I go on the 1 hour and look for the 4 hour and the 1 hour to be in the same direction, and then I go on the 15 minute and look for entries of when prices are back above a level where buyers or sellers are, depending on the direction of the 4 hour, if that makes sense.
Okay.
So I don't tend to use like the 1 hour, like for example on DXY, right? I looked at this, yeah. This is the part that I was just struggling a little bit with. I would have looked at this and be like, okay, like obviously that's just an example, but I'll just say, I'll be like, okay, indication. But if you go on the 4 hour, right, we got an indication. Price stored around this level as well, so you could have drawn this out. But if you go on the 4 hour, like we're bearish, because price created an indication, we're chopping a little bit, came up and corrected and went lower.
Okay, yeah,
So
nah,
this is the only
that's
thing that I'm like,
yeah, all that is BS. So you should
I'm so confused, bro.
yeah, those are not in the okay, bet. So I'm gonna go ahead and just
Yeah, you just show me, bro.
yeah, all right. I'll just start it from very beginning. All right, let me trying to do pull this back down. So,
Yeah.
all right, look. How do I want to do this? Uh, just okay. The way I teach, I'm not gonna draw this out that long, but the way that I teach is I want to make sure you know your ABCs before I like show you how to write words and sentences. Does that make sense?
Go ahead.
All right.
Follow.
So, huh?
No, I'm saying I'm following.
All right, bet. So look, so this is all about internal versus uh, external. Let's call external. I don't know. Okay. This is all about internal versus external market structure, highs and lows, all that stuff. Um, and
Oh,
everybody,
I thought you found it.
mute your mic, Breezy. Thank you. So with this said, like, what is this? This is just understanding that, all right, there's going to be times when the market is going to like, right, say we're uptrending, we're going to do something like this, come down, then go up, right? And we see the ICC. This is an ICC, right? Or, just break and retest, whatever you want to call it, like, right? You have a high here. This is your indication. Um, this is your indication right here. You got your correction phase right there, and then your continuation phase. We see this. We should already know this and understand this. Where internal and external market structure comes into play is understanding that this particular high in the market is an external high, and that this is an external low, and that this is an external high, and that this is an external low, and so on and so forth. Okay? And but what makes these external? What makes these external is the reality that there is a whole nother, like in order to get from this high down to this low, we have to downtrend. So there's going to be a whole downtrend that occurs, right? And this is internal inside the range of this high and this low, right? So anything that happens here, I'll go and mark it out like this. Anything that happens inside the range of this overall high in the market and this overall low in the market is considered internal. So now what do you see here? You see that sometimes you can have an external high and an internal high. We can put a lowercase h and then maybe a cursive L down here to show that your internal highs and your external your internal highs, sorry, hold on. That your internal and your external market structure will sometimes sync. That's what I'm trying to say. There's sometimes going to be the same high and low in the market. But this is also an internal high, and this is also an internal high. This is an internal low, and this is an internal low. So when I say the highest highs and the lowest lows of trends are external highs and lows, what I'm saying is that we had to uptrend to get all the way up to this high, meaning that this higher low and this higher low and this higher low, well, what? Higher low and this higher high. Hold on, I'm trying to lower. Hold on, I'm OCD. This higher high, higher high, higher high. That this entire internal uptrend is going to take you to the external highs and lows, and that the highest high and the lowest lows of your internal market structure equals external highs and lows. Does that make sense so far?
Yeah, that makes sense.
Okay.
Yeah, I get that overall concept of it.
Okay.
It's like blending it all together.
E-
But
e-
obviously, I'll let you continue.
Okay. So cool. So I'm glad this makes sense. What I'm saying is never, I'm not gonna say never, but I mean like for the sake of the teaching right now, we are not marking this out. We're not marking this high out. We're not marking this high out. We are not ICCing these levels here. We are not marking out this low. We aren't marking out this low. This is where the majority of ICC traders go wrong because they are learning how to break and retest trade properly. They're learning price action and they see the model and they try to apply it on what I call internal market structure. They try to apply it inside of a range of a trend. Now, this becomes very confusing because I could sit here and be like, all right, what about this, Romel? And I could draw a whole line like that. And then let's just say later, right, this trends down. But now what was once external is now internal. Because why? Um, what color do I want to use? Let's use the green. Because down here, this became the lowest low of the overall pink trend, and then this became the highest high of the overall pink trend. Does that make sense?
Yeah.
So the point that I'm trying to show, Akram, is that Akram? Like, I don't know. Never mind. There's a dude on Instagram I follow named named Acron to do this fire. But anyway, so understanding this, you get to this point where you understand that there are just trends within trends within trends within trends within trends. Okay, actually, I don't think I have to scroll down. I'll just keep doing it here. So there's two different approaches that you can take when you want to take this to a chart. What you can do is you can scale up to a 4-hour chart or higher or whatever the case is, and you can just try to find these levels right there. Or you can scale down and you can analyze it exactly how I'm drawing it. Either way, you're going to mark out the same price. There's two different approaches on how you can find the right prices that you're supposed to be taking your indications and your correction or your continuation trades at. Okay. So this is the proof though that I'm working through to show you conceptually so you understand what we're doing, what we're going to be looking at. So just to continue this briefly. So how do we enter into trades? What I'm saying is we should do it like this, right? When you get to these levels, there will be an internal there will be an internal ICC play that you can take at these external levels. So right here, you'll see something where price goes up, then it comes down, and then it booms and goes up, and you could enter right there because this is your internal indication. This is your correction, and then price can go up, right? Now let's just say you didn't take this trade because you're like, oh, Sai says don't take indications. All right, bet. Let's just say you don't do any of that. Price still has to come down, right? Price is gonna go up here, and then it's gonna come down, make a lower high and a lower low. This is a momentum based trade because we already have a lower high in the market. And then once we break below this higher low, this is a lower low being made, and you can take that to the downside. But we're not going to get into that too much. Point is that when price comes down, what people do, once again, this is where a lot of ICC traders mess up. Price comes back below the level. And then what do they try to do? They try to execute a buy.
Yeah, buy instantly.
They try to buy right there. As you know, or they'll wait and say there's a candle that closed up. They'll even buy it right here or up here, thinking that price is gonna go up. And they're not wrong in their overall understanding of where the market is going to go. Where they're wrong is that they are not waiting for the trends to confirm. We're still in an internal downtrend right here. We're making lower highs and lower lows. We're not making any bullish price action whatsoever. This is a lower high. This is a lower low. This is another lower high. This is a lower low. There's nothing telling us that we're making higher highs or higher lows at all internally. Therefore, no matter how much you want to enter into this trade, it's not going to work out. This is something that Sai hasn't taught. It's something I tried to teach him, but it's like at the end of the day, it's just about perspective. How does your mind comprehend and understand the charts? So until I would always say that like people always say that people who favor high time frame, or they're just smooth brain people, you know, and they don't take out time to do their own research, they always say that the higher time frames are greater or override lower time frames. And I say that instead, because this is how I learned how to trade, I say that lower time frames lead to higher time frame price action. If you think about it conceptually, you can't argue and deny this. Every high time frame trend that you have ever seen on a chart ever started on a lower time frame first. ICC,
Yeah.
indication, correction, continuation, higher high, higher low, ICC. It downtrend, lower high, low, broke this low, lower high, lower low. You're always going to see low time frame or internal market structure lead to high time frame market structure. There is no high time frame market structure without a lower time frame bias, without a lower time frame confirmation. It does not exist. So so when all about like, oh, what time frame is like, it doesn't make sense. So now, so now that the market is moving along, now we see the big white line, right? That's what we're going to be focused on. This is the main ICC diagram. This is what we're trying to actually trade. We see what? We see that this is our big indication to the upside. And so the OGs, they used to draw an arrow, up arrow, be like, hey, prices wanting to go up. Then we wait for all of this correction to happen, and you don't trade this. Okay? Then and only then, once you have market structure shift bullish internally down here with a higher high or a higher low, and then it goes up or whatever, or it goes up and creates a higher low first and then comes up and closes above, giving us the higher high. Whichever way, it doesn't matter. Once we get a set of higher, okay, once we get a higher high and a higher low, or a higher low and then a higher high, then and only then can we actually take this up to what we would then call TP1, right? This would be TP number 1. A lot of people still are not closing partials. You know, this is TP1. Take partials. And then after that, price could continue, price may not continue. This is ICC. But this internal market structure understanding is what I like. I show people this, and then they be like, oh, and then they take out a month or two to practice it, and then now you got people making money. Blue just put in the chat earlier that he's up, he's almost up like 30K. He wasn't up 30K like a couple months ago. There's another guy named Dorian. I started teaching him in February. I'm sure he's up like over 100 bands now. He started with $200, blew that account, then started up again, and then grew it. Discipline. Learned this. He learned this, and then applied his own perspectives and models or whatever. Because once you know this, then you become unstoppable. Because now you understand what you begin to understand is that the market is nothing but a bunch of ranges, right? So will the market will be like this, go up, be like this, go up again, be like this. Oh, then guess what? It's gonna come down, be like this, then go up and be like this. And and inside of all of these little areas, there's what? Chart patterns, head and shoulder patterns, you know, maybe a triangle here, whatever. And you track your highs and lows, and you can trade once you just understand how the market moves and how it shifts. So anyway, is everyone clear? Does anyone have any questions on this before I go to a chart?
No, bro. Like I get your overall. I get the concept of getting at the right time with internal market structure. But my thing was just like, Sai just says use the 1 hour or the 4 hour, and then I'm just like stuck between okay, which one do I use as my main
So what I say is that it doesn't matter, because once you know this, you'll see the same price line on the 1 hour or on the 4 hour or on the 30 minute or on the 15 once you know this. Okay, so case in point. Here's like point number one. Let me see. Let me actually just erase all of this. All right. On a 4 hour chart, right? You might have, let's just say like you got, right? Hold on. Let me think about this. Okay. You have one candle here, and then you have another candle down here, right? And then you got another candle down here. Then you got a candle, let's just say like this or something. And then you got a candle like this, and then a candle like this. All right. And this is a 4 hour chart. All right.
Okay.
All right. So what I want you to understand is that this is a 4 hour chart. On a 15-minute chart, the reason why we use time frame alignment is what this is going to look like on a 15-minute is this is going to look like price is coming down. Dang, I should have did this in pink. So pretend blue is external and pink is internal now. What this is going to look like is price is going to start here. Then it's going to downtrend to here. Then guess what? Price has to uptrend to here. Then it has to downtrend to here. Then it has to uptrend to here. Downtrend to here. Right? And so on and so forth. Then price ultimately somehow, let's just say it comes up to here because we know it had to. This is where it closed. Then it came down to create this low before it ultimately went up. But before it ultimately went up to create this high, which is higher than what? This one. Then now hopefully you can start to see where the ICC shows up, because now this is a bearish candle. We see price went here, and then now price had to come up here. So
Makes sense, yeah.
now, boom, ICC on a 4 hour chart. Price
Yeah.
broke and closed above a high of a candle. And the reason why this is important is because of what this level down here is. This is called a swing point. You know how Sai says swing highs and swing lows?
Yeah.
Okay, so swing points are how you identify swing highs and lows in the market, and they have a certain look to them. They all look the same way, meaning that you're going to have one candle there and then another candle here, and you could have another candle right here, whatever. And as long as the wick on candle number 2, meaning that this is candle number 1, candle number 2, and candle number 3, as long as this wick is lower than the wick of candle number 1 and the wick of candle number 3, that is your swing low. There's no other low you should mark out on your chart. This is where me and Sai disagree, and I know he's come around because he had said that he was going to start using Wicks more. But he used to mark his stuff out like this. And
Okay.
this would get a lot of people killed because they're thinking like prices breaking highs or lows when it's not the case. This is the low. This is the low of the candlestick. What he's marking out is the close of the candle. That's not the same. It's not synonymous. So this is the low. Once you mark this out on your 4-hour chart, these are going to be your ICC levels that you break and that you ICC trade. This will
But
be
yeah,
your
this is where I'm getting confused with, because this is what I thought about in my head.
Mhm,
I wait for an indication to be created
mhm,
on a 4-hour chart, and then I'm waiting for the
mhm.
1 hour and the 50 minute to be in the line. Am I looking at that wrong?
Yeah. So, well, okay, look. I think, okay, in concept, what you're saying is not wrong, but
Yeah.
in my opinion, my approach, I'm sure that the way you're doing it, I don't do it that way. So let's go to a chart.
Okay, cool.
All right. For the sake of this, I'm just gonna go to NAS, or do you want me to go to something else?
You can go with dollar,
All right, all
whatever you
right,
can.
all right,
Yeah.
all right. So look, in my opinion, okay, where a lot of people mess things up here. Why is my mouse not right clicking? Am I tripping? All right, whatever. Um, where a lot of people go wrong, in my opinion, let me put my keyboard over here. All right, is that you guys zoom out too much, you know,
Okay.
when you're on a higher time frame. You, if you're on a 4-hour chart and you're marking up your chart and it looks like this, you're not really analyzing what's important for you to make money today. If you're looking at this and you're looking at this, and I'm not saying these levels are not important, but I'm just saying this, you're looking
Oh,
at,
it's not relevant.
yeah, it's so irrelevant. It's far away.
Yeah.
What you The higher your time frame, and I learned this by watching a lot of SMT traders do their analysis. They be zoomed in like this. Like they look at the markets like this.
Okay.
Because you have to keep in mind, each one of these candles is 4 fucking hours long. That's a long time. Do
Yeah.
the math. How many 15-minute candles are in a 4-hour candle? It's gonna tell me if you need to go back to school.
Oh, you're actually asking me that
Yeah.
seriously?
Yeah, I'm dead ass serious.
Bro, I'm not even doing that.
16.
Um, si-
Thank you,
yeah, sorry about
somebody,
it. Yeah,
Okay, so now this is 16 15-minute candles. This is another 16 candles. This is
yeah.
16 candles. This is 16 candles. You are missing so much information. It's not even funny, right? But what information do you have? You have the highest highs and the lowest lows of what you would see on the 15-minute chart. So when you're coming, mute Baka plays, please. Mute your mic, por favor. So when you're coming to the 4-hour chart, what you want to mark out is that. And then you might not think you want to mark that out, but you want to mark that out too. You want to mark this out. You want to mark, you even want to mark this out, to be honest. You want to mark this out. All of these little levels, I promise you, they're going to look like they don't matter, but they do. Because what am I doing? Regardless of how long or how short the trends are, I'm marking out swing highs and lows. So when I scale down to that 15-minute chart, now magically all of a sudden, look at the price action that played around these levels. Nice, right? Like support, break, close back above, higher low, continuation. Like we were breaking and closing above, a little bit of a pullback. Overall, an order block was formed, probably on a 1 hour. Nope, 30-minute. Nope, 15-minute. Somewhere in there was formed, price pushed up. Price came down, made a low, lower high. Oh, and then where's our ICC trade triggering? This is the overall lower high in the market. A break of these support levels is a sell, because this is the lowest low of what trend? This one. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until the trend did what? Started making higher highs, higher lows, higher highs, higher lows, higher highs. Now this is the highest high of what? This trend, making this my lower high, my highest high, lower high. Then price comes down and breaks the lowest lows of these trends. Break, I see, that's your indication, your correction, boom, and you're in. You could snipe, you could really time great trades with the knowledge that you have if you apply it. Somebody please mute him. All right, anyway. So, and then now you're in this, you already understood market direction. ICC could capture the sell or trade that accordingly with another currency pair, right? And then seeing just where price is going to come down and stop at, these highs and lows are your targets. When we're selling, we target lows. When we're buying, we target highs. That's the nature of the market. But I'm about to show you something. Let me see if it's here. This might have been a news candle, to be honest. And also, I'm gonna switch charts. I don't know why we're looking at DXY. I don't analyze the DXY like at all.
Can we analyze gold?
Can we analyze gold?
Yes.
Yeah, I got you. Let me see. I just wanted to see if something was applicable here. No, it's not. This was news, huh? Yeah, or something. All right, let's go to gold. It's gonna make a lot more sense. All right. So I'm on a 4-hour chart, right? Normally, we looking at all of this, and what would we call this? We would call this a big no trade zone, right? Like, people wouldn't want to take any trades in this. If we scale down to the 4-hour, we see all of this choppiness. People are scared to take trades in this. Don't have to be scared to take trades here at all if you know what you're looking for. Go down to the 4-hour. What I'm showing you is the easiest approach to get these levels. All you got to do is look for swing points. You don't even need that many, just have a reference point. So for me, I'm like, I don't need to see all of this. Let me just go ahead and only see this downtrend and this uptrend. That's all I need. A downtrend and an uptrend. Sometimes I only need an uptrend or just one trend, but a downtrend and an uptrend. We'll start here. So that is a swing point. Why? Because this wick is higher than the candle that came before and the candle that came after. Meaning that in this swing, in this whole swing to the upside, this is my highest high of this trend. Where is the trend? Well, this was a low, right? Then we went up to make this high of the 4-hour candle. Then we came down and we made this higher low of this 4-hour candle. Then we made this higher high because it's higher than the previous 4-hour candle. Then we came down here and made this higher low. Then we came up here and made this higher high before we made a bearish candle. Then we went up here and made lower highs and so on and so forth. Because this is a 4-hour chart, this is how you have to look at your 4-hour chart. Because case in point, bar replay, please. Thank you. Case in point, if I drop down to the 15-minute here, watch, let me prove it. I'm gonna mark that out and I'm gonna mark this out. Look at what I just marked on the 4-hour. This would be insignificant normally. Drop down to the 15 or even a 5, and what I just marked out was a higher high and a low and a higher low on the 15-minute or on a 5-minute or just in price action in a general sense. Okay. So once you understand the fractal nature, the fractional nature of trends, you'll be able to understand what you're looking at. So anyway, let's just go back and do the analysis. That's the highest high. This is the lowest low. Now, this is the next highest high that we're at. Now, what I want to understand, actually, let's do it like this. Say I'm analyzing this. What I want to mark are all of my swing points. So this is one. This is also one of them. This is not one. Why? Because this wick is not higher than the previous candle. What about this wick at the low? That's a swing point because that wick's low is lower than the candle that came before and the one that came after. This is a swing point. This is a swing point. It might get tedious and it might feel cluttered, but all of these levels are going to be your friend at some point. This is a swing low. This is a swing high. I'm not going to mark this one just because this is like just where the week opened. This is the opening price. It gapped down. This is a swing low, right? Now we have a couple different swing highs in the market here, but ultimately, let's just say that's the highest one. I don't want to get too cluttered. Come down to this low, this high. Okay, cool. Now, something I could do is go down to the 1 hour and see if there's anything that I missed or anything I'd like to add. So keep in mind, these are all my 4-hour levels. There's going to be a lot more swing points because all of these are swing lows going up in this trend. Higher high, higher low, 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 and so on and so forth. Do I want to mark each and every one of these out? Maybe not. No, it's going to clutter my chart up too much. So anyway, I'm just trying to see if there's anything I'd want to add. And for the most part, like, I'm fine. I'm pretty sure this is going to be fine enough. Only other thing I would add, when it comes to internal market structure, I usually like to mark out the very last high and low before a range was broken. So we have this bearish range right here, and price broke it, giving us an indication above it in a way. So I usually like to see where did buyers originally try to hold that price at. So this would be like a 1 hour swing low. But aside from that, we have everything that we needed. And then we're going to drop down to the 5-minute chart and just watch how price starts to act at all of these levels. So what are we looking for though? We're looking for our market structure to shift. All I'm admonishing is that your market structure will shift, your trends will confirm near these yellow lines, near these price levels. As long as you have these price levels on your chart, you have the right level at the right time that you have the right level that's going to be broken at the right time when you should take your trade. That's what I'm saying. It might not look like pretty analysis, but when it is time for price to do what it needs to do, it's going to do it at these lines. You have to like trust that. Just like how we created the higher low here. Now we have a higher high. You see it. You see the trend is shifting. You should know that the uptrend is coming and you should be like looking to buy, right? And so now this is where the internal market structure dynamics come into play, where these are your overall major levels. And then now we have a high, low, higher high, higher low, and we're using internal market structure for our entries. But only when we get confirmations of trades triggering at our major swing points, right? Give or take however much. And then we can just let those trades play out. And the whole point is where should your stop losses be? Your stop losses are always below where price started. Now, what time did I enter that trade? I just entered it without understanding what time it was. It was 9 p.m. So the market wasn't even open yet. Market didn't open. This is London session. So if you would have waited until London session, then you could have gotten a London session entry here with a nice higher low and then price coming back up across this level for buys. Let's see what happens by the time New York session is here. By the time New York session was here, you already missed the move. But now let's be like, all right, let's go ahead and follow price and see how price interacts at all of these lines just to prove a point. I'm just gonna let price play. And just take note of how price bounces and plays in and around these lines. And then we'll go back and like review it. I'm on a 1 minute chart, I guess. We can go to like a 5. So boom, that was a nice break. It might test. There's a test, comes back below, confirms support, buys back up. So there's your indication, correction, continuation. Comes back for another perfect test. You don't get that. Holds that whole area, hits TP1 and continues. Now we're up here. And look, downtrend just kind of started. It might be a weak one, but we have a high, lower lows being made. So if price holds in this area or it doesn't break this high, then price can sell off. Now we zoom out, we see there's an overall lower high in this region, and now we could have anticipated this downtrend way before it ever even started. Now price comes down, bounces off this level that we already bought off before, and guess what? You already had it on your chart. You just kind of gotta like trust the fact that these lines are gonna carry weight. But you're always gonna get an early warning sign, and this is just proving exactly what I was saying. Is that lower time frames lead to higher time frame price action. Price telling us that sellers wanted to take price lower on this little 5-minute chart led to price being taken lower overall. Price giving us the ICC buy, correction, continuation here, and holding support and tapping this level and delivering us up to these highs. That alone let us know that this price was strong. Buyers won here. So what do we think is going to happen the next time we're at that level? Oh, okay, well, we don't want to take that trade. Okay, well then guess what? There's still ICC here. If you got it like that, like if you're good enough to understand that what you're looking at, you can still push price up. Like or still capture the trade, understanding that price is going to go up because you're tracking your internal market structure. So Going back to this, what I was saying was that there are going to be times when your internal little tiny highs and lows are going to be the same as your external major highs and lows. And these are roughly the best regions where you can execute your trades for buys and for sells. And then if you find yourself anywhere near one of these levels, those can also be good low time frame executions to capture the move or get into a move that's already started or to take rejections off of a high or a low or anything like that. If you just kind of go on your chart and mark these levels out, you'll already see what's going to happen before it happens. Let's let's keep it going. And you know, and by now, obviously, there are a lot more levels to have marked out. So you would want to update your chart, right? So, you know, we can easily remove everything and start over. It doesn't take long to do this analysis. Put a line at the low, boom. Now you could be more picky with which ones you mark out. You don't have to mark each and every one out. You can mark out the highest highs and the lowest lows of them, you know, or whatever. But, you know, I'm a scalper by nature and I trade futures, so I don't, yeah. Um, da, da, da. We broke this high, right? And then I'm looking up here to see like what levels. This one is kind of going through, so at least it gives me a level in this region I might could take a play off of. And then after that, we're looking at, I mean, an old level back there and then one up here. I'm just trying to fill up my chart. Like I'm trying to fill up my chart for a reason. So I always have a level to test and trade at, but I'm not trying to like go crazy. You know what I'm saying? And so now we can go back down and we can see and wait and see how price is going to play out with these levels. Right? There's going to be a trade somewhere. There's always a trade. Price can only do two things, either buy or sell, break a level or not. So we come down to that level and then we decide to ultimately buy off of it. Then we go up to this level, then we sell off of it. Now we broke it. But, you know, and I'm like, in the moment, you're going to know, like, you see a nice impulse at one of these levels, you're going to know which direction to take a trade at. It's not hard. You see how price is ultimately just bouncing between level and level, breaking out of levels after creating a higher low, bouncing off that level, boom, bouncing off of it on the top, lower low, or I mean lower high being made, break it, come down to this level, then you know, it's and this is choppy, but you already have levels where you could have been getting in to buy here and be like, oh Romel, how would you have known? I have 1, 2, 3, 4, 5 candles getting taken out by one bullish candle. I mean, then I have an order block being made. I it's gonna go up. You know? Oh, Romel, how would you have known to take this one? Well, if people who come from ICT backgrounds, we understand. You know, just what's what. We understand that that's a fair value gap. We understand that candles that don't have a wick are liquidity, so that got rated. I could have gotten in any of these areas, or just simply gave you a swing high and a swing low to put on your chart, and now you're getting the entry execution, just like some of the most famous quarterly theory sequential SMT traders out there in the world, just because you know which high and low to mark out on your chart. You can take your liquidity plays, and this is how you should be trading, especially once you identify your inner range. You don't sell at the low and you don't buy at the high. You buy down here and you sell it up here, and you just ping pong back and forth. So anyway, you keep it going, and you know, break, retest, sell, indications, a whole bunch of indications being made, but at these levels it's like break, retest, continuation to sell off, another one, break, retest, sell off. These are scalps, right? But it's like, you know, you still see it. Now you have a huge bullish candle with an order block right here. Like, if I could draw it, but somewhere right there. So then you knew to probably potentially take some buys here, but the market was choppy. I'm not I haven't been trading gold. Double bottom, boom, right here on this swing point. That's what I'm saying. If you just mark these levels out, you can damn near leave them on your chart for like a couple days and just keep trading them, right? This is how I trade. Now that's a scalping approach. If you want to swing and you're a swing trader and you want to trade like Psy, here's how you do that. Using this same approach. You don't mark out all of the levels that I marked out. You mark out like only the important ones. So you would zoom out a little bit and you mark out you're still marking out swing points though. Nothing changes. You just now go from marking out all of the internal ones to just only the ones that are at the highest highs and the lowest lows of ranges, right? So the range of this uptrend, this is the one at the low, this is the one at the high. That's it. The range of this downtrend, they're roughly the same price, but boom, this is the highest one, this is the lowest one. The range of this downtrend, this is the lowest one down here. And then so far, did we start a downtrend? We started a little internal one, so we could mark this one for now. And then you could just do that. And then the next thing you would want to do is understand that you would want to go one level down. So understand that this is the path that the market just took, right? And this is where we currently are. What do I mean when I say go one level down? We want to know, how did we get from here? How in the world did we get from up here to down here? How did we do that? How did we get from this high to this low? We would have to understand that, okay, bet. Let's just scale down real quick. Go to the 1 hour. And if your mic is not big, well, mute your mic, please. All you got to do is go down a time frame, and then just do the same thing we just did, but on the next scale down. Price started here, and we downtrended our way. We made a low, lower high, lower low, lower high, lower low, lower high. We went sideways, another lower low, lower high, lower low, lower high. Just mark the fact that we went all the way down and downtrended to here. There really was no uptrend that started until we got to this low. Why am I calling this an uptrend? Because we actually did uptrend, unlike everywhere else. Whose mic is not muted? Daniel, mute your mic. So price came down here and created lows, then a lower high, lower low, lower high, lower low, or higher low, but this is not an uptrend until we make a higher high. And we didn't do that. So there was no uptrend that started. So that's why I ignored this area. Came down and made another lower low. We made a lower high. We made a higher low, but then we made another lower high, equal low, equal high. We didn't break this high. There was no uptrend that started, so I ignored this area. We came down here, and I chose to ignore all of this because it was a market gap. Okay, the market gapped here. So yes, this is a lower low. Even if I didn't, this is a lower low. This is a higher high. Price came down, and it never closed above to start an uptrend. It never gave us the higher low, and then the breakout. It never gave us the higher high, the continuation. So there is no uptrend that started here. But at this low, we made a high, higher low, higher 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 high for a minute. This is 2 days. This is Monday all the way to Wednesday. We did a very slow uptrend for like two-ish days or so. Okay. So I'm gonna mark this out. That buyers they literally confirmed an uptrend and they tried to make something shake here. So then what does that mean? This is where sellers took control of this bullish uptrend. Lower low, lower high, lower low. I didn't mark this out. Why? Because this is just internal structure. This is nothing more than just a piece of, how do I call it? This is nothing more than a piece of the downtrend. Could this be important? Yes, it could. I'm not going to get into why right now. But where did the overall trade confirm? When price went up and closed above this area that took these sellers out. So now where's your ICC trade? ICC trade is going to be ideally, this is going to be one of them, right? When price, like this is going to be one of them, but because there's a gap in the market here, it's likely that price is going to come down to this one before it actually goes all the way up. Because how many times have you been on a chart and you see a breakout and it gives you two indications at once? It gives you one right here, and then it gives you another one up here. And then you'd be like, confused, oh, which one do I take my trade at? Well, do we buy low and sell high? Yes. So then what's the lowest price you can buy it at? The lowest reasonable price is down here. So ideally, we would want to wait for price to get to this one and then come up in order to take these swing trades to the upside. Or you could just wait for price to finish this downtrend. Did it make an uptrend? No, it did not. I don't care how noisy it looks. Price was up here, and all of this is internal. It broke, made lows, lower highs, lower lows, lower highs. All of this stuff is lower. There's no uptrend being confirmed, but what are people doing? They're ignoring the market, and they're zoomed in, and they're trying to take all of these little trades. They're being crackheads. They're looking at this like an indication to the downside. And then it goes up and they're like, damn, right? Like you're not being cognizant. Okay, let me be nice. Maybe you're just ignorant and you just don't know. That could be a reality, you know? So yeah. But so now let's go ahead and let's just see what we've marked out. I'm gonna leave this here. You see how I marked this out on a lower time frame? Let's go up to a higher time frame, 4 hour. So now you see what I've marked out. It's the highest high, lower. Oh wait, no, I already did that. But these are all swing points. Let me go to NQ to prove a point real quick. I'm about to prove something to you real quick. All right, let's see. Let me find something easy to mark out. Oh, okay, here, I'll mark this out. All right. For the sake of it being easier, I'm gonna go do it on the 30-minute chart, but pretend I'm marking out 15-minute market structure, okay? So I'm gonna mark out this whole uptrend. Right? This whole uptrend is what I'm analyzing. So I'm not gonna draw this line, but what I'm gonna do is explain how we got from here up to here. So the first overall thing I'm gonna do is I'm gonna go all the way up until this trend changes. We made higher lows, little whatever blips in the market, higher highs, higher lows, higher highs, higher lows, and we didn't make any lower lows and lower highs until over here. So this is the highest high of this uptrend because that's what it is. Then we started a downtrend. Low, lower high. A break of this low is a downtrend. I don't care how short-lived it is a downtrend. And the downtrend decided to end here. Why? Because we made a higher low and we broke that high right here. And price continued to go up and continue to uptrend all the way until we got to up here. So that's the highest high of that uptrend. Higher low. These are lower highs. These are higher lows. But then we break these lower highs and this one to continue the uptrend, and we don't start a downtrend. This is a lower low, but we didn't make a lower high and come down to confirm this sell. So we continue to trend up, 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 and then this is the highest high of our trend. Why am I marking this out? Simply because this right here, this impulse, it broke structure that explained this whole range. That's the lowest low of that trend. We consolidate, but we're still making higher lows, higher high, higher low, and all this stuff. So now this is how the market went from here to up there. Let me explain. All right, whatever. So anyway, this is how we went from here to up there. When we go to the 4-hour chart, what you'll notice is the same thing that I'm saying. What did I mark out? Swing points. That's a swing low. This is a swing high. This is a swing low. This is a swing high. This is a swing low. This is a swing high. This is another swing low down here in these areas, and so on and so forth. So now can you see how I'm saying you have two different approaches to get the same levels? I was marking out the 4-hour swing points at first to show you, be like, hey, yo, trust me, bro. These are the trades that you're going to want to ICC at. But then now I just showed you another approach from the 15-minute where the highest highs and the lowest lows are your levels where you want to take your trades at. Notice I didn't mark out anything else on my chart. I didn't mark out any internal market structure. I just marked out my external highs and lows based on my 15-minute trends, right? There's my indications, there's my corrections, there's my continuations, TP hit. Here's my indications, there's my corrections, here's my continuations. They even gave you a TP and a retest for the continuation to the upside. It's the same thing. If you're on your chart and you're marking out anything more than this, you're kind of overcomplicating ICC. It's not kind of, but you are. And it's weird, but this is the truth of the matter, right? So now when I say this, the sauce is all about perspective, what I'm saying is if you can understand how to chart and mark up noise, and you're a low time frame trader, and you know you're low time frame friendly, then you can take this zigzag sort of type of approach. Or if you want a shortcut, which is, I mean, I don't know why anyone wouldn't take the shortcut, just go ahead and mark out. You don't have to waste your time trying to analyze where these trends start and stop. Just mark out the swing lows, the swing highs, the swing lows, the swing highs of all of these ranges, because that's what this is. This is a bullish range. And we came down for a 50% retracement, and we closed above the bullish range, meaning that all of the buyers that existed inside of this bearish range got taken out. So we're bullish above the range from this swing high to this swing low. So then we get the breakout, and then we get the retest, and then we buy it. It's that simple. And then now guess what? You can just keep understanding that the market is full of ranges, because this was a bullish range. Then we came down and did a 50% retracement, and then we bought out of it, which means that all of the sellers that gave us that 50% retracement got taken out the market. So then we break, retest, and buy again. And it just keeps rinsing and repeating over and over. There's only a couple things you need to know when it comes to trading, and it's simply the the only things you really need to know is to okay, I'm not gonna say these are the only things you need, because I know like 20 times more information than I've shared. But to be a profitable trader with the basics, the only thing you need to know is your highs and lows, right? And under this, you need to know how to track them, right? Meaning that you know that this lower lows, lower highs, lower lows, lower highs equals a downtrend. And then you know that higher highs and higher lows and higher highs and higher lows equals an uptrend. Cool. The next thing you need to know about this is that you could just call it major versus minor, or external versus internal. Okay. And you can take two different approaches to mark this stuff out. Approach number one is a low time frame approach, which is the highest highs and the lowest lows. Or number two, which is a shortcut even, you take the high time frame approach and you mark out swing points. And these are usually going to be like internal swing points on that chart. And I'll say side note, internal 4-hour highs and lows are external 15-minute highs and lows. Okay. So this is all the information you have to understand when it comes to like highs and lows. This is highs and lows 101, right? And so that's one. The next thing you need to know, and if you want to screenshot this, screenshot it. I recorded this whole session, by the way, so I'll upload it and you guys can see it later. The other thing you need to know is ranges, okay? Ranges. This is important, and this is exactly what I just talked about. Ranges. And these are from swing point, or yeah, from swing to swing. From swing to swing. Right? And I actually have a whole nother video on ranges already. Just go watch that. But basically it's like from swing to swing. You're going to have bullish ranges and bearish ranges, and both uptrends and downtrends. It doesn't matter. So here's an example of two uptrends, right? Or actually, I'll go ahead and draw three. I'll do these the same. You have to understand that this is going to be a range from this low to this high. This is a bullish range. This is also a bullish range as well. From this low to this high. But then this is a bearish range right here. From this high to this low. And that as price action is moving along, that it's going to be it's either going to be taking ranges out of the market or fulfilling ranges in the market. So in this bullish range, save this for later, but all that's necessary for a range to get confirmed is a 50% test. And then price comes up and breaks out of that range. But in order to do this, what just happened? It means that you just have to understand that we just had to create a bearish downtrend, meaning that we just had to create a bearish range. And when this gets taken out, now all of the sellers that tried to get busy into the market inside this whole area just got wiped out. Right? And it's just this will lead you to understanding, and I'm not going to get into this right now, but understanding ranges will lead you to understanding this very important word. Market sentiment, which is exactly what Sai is trying to show you guys. Anytime when he's like, hey, yo, price broke this high, whatever, made an indication, this let me know that all of the sellers in the market at this price are taken out. Bet. So that means that the market sentiment at this price is now bullish. Right? Until this happens, we're not. If this never happened and price only stayed in this area, we're still in a bearish range. That's the proof. The fact that he says that, hey, once we take this high out, now we're bullish because all of the sellers in this area are out of the market. If we don't do that and we stay in this area, we're bearish. Because sometimes this is what happens, and people don't anticipate this because they just don't know this. Price will be trending and it's going up, right? And then the market will create a bearish range, and then it'll be like right here, right? And let's just say people maybe even got into a trade. People even got into a buy right down here. They got into an ICC trade and they're trying to hold it to TP, but it doesn't get there. Maybe you can say even there's a candle that forms in this area and it wicks across the high on a higher time frame, but it doesn't close. I drew that kind of bad. Hold on. So say there is a candle right here, and on a 1 hour chart or 4 hour chart, it even wicks above, but it doesn't close above. And people might be on a lower time frame thinking, oh, price is still bullish. No, 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 it's not bullish. We need candle closures, important candle closures. And so what'll happen is just like how Sai says, hey, if we close above this and that lets us know that all of these sellers are out the market. What sellers? These sellers right here. If we fail to close above these, then that means we're still inside this whole bullish range. This whole region right here is, bearish. This whole region right here is bearish. Because of what? This high in the market and this low. And if we don't close above that bearish range, then the market goes back down. And the likelihood of us closing below the low becomes even greater, which is why sometimes the market will reverse and give us a lower high, then a lower low. A lot of people are familiar with a lot of people are. Do I have any more room to draw? Let's erase this. I'll draw right here. A lot of people are familiar with really only one way that the market reverses, because it's one of the, it is the model that ICC is taught on. People be like, okay, the market does this, and then ultimately, let's just say it's like comes down, then up, then down, right? And it gives us that ICC right here, where this is your I, your indication, and then your correction phase, and then here is your entry, because this is your continuation to the downside, right? The market doesn't always have to reverse in this manner. Sometimes the market will reverse like this. Sometimes the market will reverse like this. We'll go up, down, up. And then it'll create a lower high first, then sell off, right? Then come up and continue down to the downside, because of this same concept that I just explained. If price doesn't close above the high of a bearish range, the understanding that inside of this area here, right here, sellers are in control in this whole entire region at the moment. And so then we end up getting a lower high in the market, right? And this is a higher low. But then once we break this, that's actually our entry. Why is this our entry? Why is this not an indication? Because this is your indication now. This is indicating that price can't go higher than this higher high up here. This whatever. And then when price comes down and it closes a candle right here, this becomes your lower low. And you can just take that down. And usually when you have nice support and resistance trades, go back and back test it and try to prove me wrong. But this is where your perfect support and resistance trades trigger right here. When the market structure shifts in this manner by giving you the lower highs first for downtrends and the same thing for uptrends. If price is downtrending by giving you this higher low first. And then this is where you get your fair value gaps. This is where the market does this type shit. And then you have this whole gap in the market right here. I'll make it green because you'll have a whole bullish fair value gap. If you know what those are, boom. And then price does what? Comes all the way back down, taps inside of it, and then buys out of it again. So as soon as you just understand highs and lows, and then you understand ranges with experience, experience teaches you what ranges are all about. You shouldn't need anything else to be profitable. Is there a lot of other stuff that you can apply? Yeah, that's really all you need for real. Now, what is this argument going on in the chat? Somebody unmute and talk to me. What's going on? I haven't been reading it.
Nah, look, what I was saying is when you done, I'm gonna go on and I'm gonna give people the secrets to precision entries, to time and entries. It's a lot of secrets to time when it comes to entries, and I'll just share my sauce when you done. Give me your value. That's all I was saying.
I got you. All right. Like what you trade quarterly theory, order blocks, unmitigated this and that, SMTs. What's your
Yeah, I know all about that. Mainly just time and price though. But yeah, I do trade
macros?
ICT. Yeah, macros, all that type of thing.
Okay.
Execution times.
Got you. Yeah. I don't even concern myself with that stuff though. But like I know what time I like I know what time the macro opens and windows are and kill zones and blah blah. But at the end of the day, it's like I've learned that all of this shit still just plays out at these external highs and lows. Like,
Right.
but
See,
yeah,
I know all about it, but you know, I understand. Since I'm experienced with it, I know how to
simplify it.
basically simplify, take all the bullshit, and show you just the important things you need. Like,
All right,
if you want to be like a fucking nerd, a market wizard, technician, like it's good to know that. But like once you do learn it and you refine your strategy, like on the same concepts, you gonna know what you need and what you don't need. So,
got you.
but like it's good to have like everything in your bag. Like you got all that stuff in your bag to where you could bring it out if you want to. Like you really had to.
I agree with you. I got a lot of stuff in my bag. I think I got too much stuff in my bag. But Ego, are you still here? He's not here no more. He left. All right. Well,
But not like you give us some sauce. Like I want to say you doing nothing wrong, but it's like
no,
I didn't know what kind of class. I didn't know you was doing like a little higher, lower, lower.
Oh no. This is so what this was for. This is just me showing ICC, and that's it. Like pure ICC, a little bit more refined without trying to add anything on top of it, except the most basic stuff that I can add to it.
Right.
Because like,
Okay, do your
yeah,
thing, man. You gotta do your thing.
he's gone. Alien, how are you doing? Does this stuff make sense? Because you was asking me a question earlier in the chat. I think everybody should be fine, to be honest. All right. So then I'm gonna stop recording then. That's how long is this? An hour and a half?